presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hey, Robert, how you doing, man?
Yes, good, and thank you for taking my call. I wanted to let you know that I've been a subscriber for a couple of years, just different members of your team, and I really enjoy it. But really the reason I'm calling is to express my sincerest gratitude for you providing that information yesterday on the small business grant. I'm a small business owner and primary breadwinner for my family, and if I can get that money, it's going to really mean a lot to my family. So
that's awesome.
Thank you for taking the time to do that.
No, well, listen, man, we appreciate you growling and prowling with us.
Now, Tom O'Brien.
What's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. I hope you all had a fantastic weekend. We have another, down day in the market. We're significantly down right now. The SPY off about 1.66%. The composite off about 2.27%. The Dow Jones Industrial trading off about 1.48%. With the Russell Futures off about 2.33. You had kind of a fake out in the beginning of the day, and then just a massive sell-off. We're going to have Steve Rhodes on today. Maybe we will find out if you're seeing some of that, pre-market pump up in other currencies, which will kind of explain what was happening. I know that was going on a few months ago, where, the mornings were fantastic, and that's because Euro and other guys were buying the market. We were selling into them. Let's see what else. You have crude oil off about 2.06%. Seems like there is going to be potentially an output increase in the OPEC countries due to pressure from Trump. So we'll see what happens with that. But you're trading off about 2.05% right now in the crude futures. Of course, I'll say, if you're liking that side, always look at drip here. This is from our friends over at Direction, up 9.42% today. That, of course, is an inverse oil there. And then, of course, you have Gush if you believe we're going to see a trend reversal. So interesting stuff. Check all that out. Gold coming back up. Probably just a little bit of a sell-off after making all-time highs there. Trading up 1.59% at 2,893. If things continue to go the way that they're going, meaning if Q1 for a lot of these guys is not as good, you're still getting growth, but contraction of it. I think you'll start seeing a better fundamental argument for the gold miners getting some attention. Should be interesting. Of course, a lot of this, everything we're dealing with right now is very dependent on what happens tomorrow, right? You have the State of the Union address tomorrow. The tariffs are supposed to set up tomorrow. That's for Canada and Mexico, and they're increasing tariffs on China. If that, gets resolved relatively quickly, I think that does kind of take some weight off of the market, and you get some movement to the upside. There are some positive views from a lot of the larger banks. This is on some weird stuff. I was talking with someone this weekend who works for one. They're like, we see equities are not necessarily bad this year. As to what this was, I was talking to him about, and he says, there's just a lot of uncertainty. That's what we've been talking about here, right? There's just so much uncertainty with what's going on. Trump is kind of trying to set the board, I believe, in the way that he wants it to be set, so he can operate from there. If we make the minerals deal with Ukraine, and hopefully we do pass that, I think this market has a lot of upside. But I think there's a lot of uncertainty right now. I think inflation is still very high. Of course, you're getting some info from the Atlanta Fed saying that they're seeing nearly a 2.3% decrease to the downside this quarter, right? So, that's massive contraction right there. So we'll see what happens. Consumer confidence is low. This might be a time where the Fed steps in and says, hey, we might offer some interest rates. Because what you're seeing here is really liquidity leaving the market, right? And I would venture to kind of assume that there's not, many undertakings right now on projects, let's say in real estate or anything along those lines. I think liquidity will become a little bit scarce going forward, and I think that's due to the uncertainty that comes along with Donald Trump. One of the things I will say as well is we had that hurricane, we had two hurricanes that came in this area and really wiped out our beaches. you had these guys haunting around being like, hey, we'll buy your home for, cash. And obviously it was a vast, discount they were trying to buy it for. And that had actually been going on until about a few weeks ago, and they all just stopped. It all dried up. So, I think there, is somewhat, again, I've been saying it constantly, of a liquidity fear. I think you're seeing that reaction now, which is obviously contributing to that. So yeah, we'll see what happens. I don't think we're out of the woods yet, but a lot of this is dependent on what Trump says, on the State of the Union. One of the things I did find very interesting is he said yesterday that we are going to do the cryptocurrency reserves, looking at Cardano, Ripple, Ethereum, Bitcoin, and he had an amazing rally in Bitcoin and these other currencies. Well, Cardano shot up quite a bit, and at least as it stands for Bitcoin, you're right back down. It didn't hold, so there's like this kind of flush going on. 5 days, really from what he was saying, so you're still up 2%, right, on the usual trend from Trump saying that yesterday, but we'll see what happens. It's just a weak market, I thought it was very interesting that they kind of gave it up today. But again, I think that is people's fear, right? You're getting some extra liquidity. Okay, let me get out of this thing, man. I don't know what's going to happen. I need to have cash. If this really does crater, okay, that's fine. I've protected my, money, and then I can also buy at that bottom, right? So that's kind of what's going on. Additionally, I was looking at some of these like event contracts for tomorrow. Kind of nuts. You can check these out. It's an interesting way maybe to hedge yourself. I don't know. I was looking at it in that kind of light. But what will Trump say at the State of the Union address, talking about crypto, Bitcoin, drill baby drill. They have a lot of other options. Best AI this month. Epstein document declassification. It's interesting. I always find these binary contracts a little bit interesting. What they've essentially come out to be is kind of like betting, right? But the way they're really starting out was almost like an easier way to kind of hedge any risk you had. Early in the beginning, it was talking about, will there be any kind of increase in, let's say, like lumber or something, right? So guys who are in that industry, if they, know they might not be getting enough this month or whatever it might be, can kind of hedge themselves that way. So it's kind of interesting. Let's look a little bit. Palantir just flipped red. Okay, you're up a little bit today, maybe about 2%, trading now at 84.35. You did have an analyst letter come out for them saying, where is it? Benefits from the streamlined U.S. government spending. This is Wedbush, whatever. I don't always take what these guys say with, I take it with a large grain of salt. But I do think, we were talking about that. Just this had this move to the downside, and really it is the broader market kind of affecting it. And the stocks that had more oomph to the upside, where everything was growing, are obviously going to be more sensitive, to any price movement, whatever direction. But with Trump saying we are going to decrease some military spending, this is kind of what I was trying to say with it. It doesn't mean that things like what Palantir are doing get cut. It could mean that, but it doesn't inherently mean that, right? It's just about perhaps better efficiency. Palantir could even get an increase, but if there's these kind of black holes in the budget, you take it out, you still, you don't throw the baby out with the bathwater. And it's kind of the way I was looking at it. So we'll see what kind of develops with that. We are trading at 84.26 right now, the PE of 443 still, market cap of 189 billion. Folks, stay right there. We'll be right back with Steve Rhodes right after the break.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, everybody. This is Jacob Shoup watching the Tom O'Brien Show. It is a Monday, and that means we are joined by Steve Rhodes. Steve Rhodes is the author of the Mastering Probability newsletter. He's also the host of the Trader's Edge on at 11 a.m. Eastern Time, right here on TFNN. Check it out, okay? This is what I say about Mastering Probabilities. If you want to get just the most amount of data you can, and it's condensed in a consumable way, in a digestible way, this is what I read every morning, right? And it gives me kind of a beat of what's going on in the market, what might have been happening overnight. And it's really just a nice way to get your bearings for the day. Go ahead and check it out. Again, if you are a first-time subscriber, you can do this risk-free. If for whatever reason it doesn't work out for you, we do offer a 30-day money-back guarantee on all of our newsletters. I'm going to bet that is going to work out for you. Steve, how are you doing?
I'm doing great, Jacob. Thanks for being so kind. Your kind words.
Oh, absolutely. I mean it too. This is a fantastic newsletter. I really enjoy it. So
that's great. You know, I always enjoy doing these segments, and I'll usually spend about an hour and a half or so just kind of preparing my thoughts to try to figure out in maybe about 15 minutes or so, you know, what can I convey in a logical manner. You know, and that makes it worthwhile for somebody to listen in. But every now and then, I have an expression that everything in life is happening for us, not to us. Sometimes, I may have put together a presentation and then the market changes in the last half hour. And I say, you know what, we're going to do something different. Scrap that 90 minutes worth of work and let's take a look at what's going on now, because that's what's important, to our listeners here. And so this first screen that I have up here, this is something new that I had developed right around election time. Okay. And I'd never taken a look at the market this way. And what I'm referring to, and I'm just going to simply open up the Dow chart first here. And what I mean, what I did was I went back and took a look at every, I provide, as you know, seasonal cycle charts out there. Yes. We can take a look at a presidential seasonal cycle, all kinds of seasonal patterns that are out there. So what I did, back around the election time was I started taking a look at a daily chart, which is what I've got up on my screen right now. I know I've got a lot of data here, so things are acting a little bit slow. So I'm trying to just squeeze this a bit. But what we should see here momentarily, there we go, is we should see this line here says Biden's first term. This shows you what the S&P, or this is the Dow. This shows you how the Dow traded the day after the election. Yes. All right. Yeah. And as I kept going back further out there, so I said, okay, that's interesting that, for that 4-year period of time, market performed pretty well. You can't really argue with statistics with regard to data. I wonder what happened during Trump's first term? What happened to the term before that? And then what really opened my eyes, what I thought was, is this just a coincidence or what have you? Trump's first term, 17/9/94/64, was the day after the election. That was the open inside of the S&P 500. And then we get that COVID crash.
Yes.
And when I saw this COVID crash, it pulled right back and basically stopped right at that first term, like it was a support level, a support or resistance level. If you take a look at the second term for Obama, it opened up in that next election day. Price started moving lower, but once price got back above that support/resistance line, markets continue to move. So I went back further and further to take a look at that. But what I want to do right now is just give folks the level to be watching for the Dow. I'm just trying to, my charts are, I get so many things going. 42,850.40. That's kind of what I call right now the Trump breakout level.
Yes.
And price is still, we're trading just above that inside the Dow. If we look at the S&P 500, that'd be the second center chart here on the top. It's at 58.64. We're trading just below that right now. We're trading just below the NDX 100. If we look at these instruments, these 9 instruments, there's one instrument that has performed the best since the Trump election. And that has been natural gas. That is the lower left-hand chart out here. We can see that with the exception of maybe, I don't even think it was one day, natural gas is traded above the price point after the date of the election. So that might be something that folks want to take a look at, maybe investigate a little bit further out there. So I've got gold. We can see right now gold is trading above that level. In fact, this is kind of interesting, right? If you take a look at the gold chart here, just to show you really how this works, how it's not really just a random data point, is gold. The first day after the morning of the after the election, gold was opened up at 2758.80 and just continued to move lower. And then we rallied right back into, look at this time period here in the early part of this, middle part of December. Gold rallied and found resistance right at that level. Right, it's got to be an important level, or in my opinion, when I watch price behavior like this is an important level to know and understand. And so again, 2758 is the number out there. Natural gas has performed the best. Before I would move off of this chart, is there anything that you're looking at or anything that you've got questions about?
You know, one of the things I did want to ask you, you've had it the past 2 weeks, right? And sometimes throughout the week as well, but mainly on like your Sundays and Monday mornings.
Yes.
Where you're getting the futures, right? I mean, really rallying up and then we sell off. And I remember maybe, I don't know, in December or something like that, we were seeing the same kind of thing. And you were looking at, buys really in the SPX in different currencies, right? We were kind of seeing that the other countries were buying the market. It seemed like America was selling into them. I don't know if you're seeing anything similar with that now, or if this is kind of just a big fake out that's going on.
So it's a great question, and I haven't updated because I have to do that work manually.
I see. Okay.
I haven't updated, but I want to share with you and really the listeners out there because they can answer this question for themselves. There's an easy way to do it, and everybody has access to the data, and you can do it. I'd say if you focus on either the Dow or the S&P or both, and which I really mean is the diamonds or the SPYs, because what you do is you're taking a look at overnight action. So you're measuring in essence, today's close to tomorrow's open inside the stock market. And you're doing just the opposite. So that's telling you what's going on internationally.
Yes.
We take a look at from the market open to the market close. That tells us what's going on inside the U.S.
Right.
And so you are exactly right. There was a period of time that I hadn't seen for decades. I was never even really able to find another period of time where it was just so clear the advances that were being made overnight, and it was international capital that was flowing here.
That's right.
And then whoever was selling in the U.S. was taking advantage of that.
That's right.
So if somebody just looks at the SPY, they can go back, they can do that data, in a spreadsheet. They'll be able to answer that question. And it is an important question to try to understand out there, as well as other things that we look at. So great question. I don't have the answer for you, but I'll have it next week. How about that?
Fantastic. Yeah, would love that.
There's another data point that's really also important here. And I'm going to pull this up. This is the S&P 500. Whoops, it was the S&P 500. I'm still going to pull that up. Where the Sam heck did I put that? Here we go. S&P 500. Now this is a really cool and really important pattern out here. If you take a look at right now, if you're just looking at the upper right-hand portion of the screen, what you see out here is I've identified the January high and the January low. And I recommend that everybody else do that. If you'd ask me what kind of market are we trading in right now, in fact, anybody can look at that and they already know the answer. We're consolidating between the January low and the January high.
Yeah. Is
that important? Yeah, it is pretty important, especially when we take a look at prior price behavior. Let's take a look at 2024 as an example. 2024, here's a January low. Price never came back and even tested it or what have you. The January high, we rallied up into the time of about the April timeframe, April-May timeframe. We pulled back and we tested that January high, rejected it, and continued to move higher out there.
Yeah, Steve, please stay right there. Folks, we'll be right back with Steve Rhodes right after the break.
You got it.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, everybody. This is Jacob Shoup. I am joined right now by Steve Rhodes. Steve is the author of the Mastering Probability newsletter. He's also the host of the Trader's Edge on at 11 a.m. Eastern Time every day. The market is open right here on TFNN. Steve, before we went to the break, we were looking at, basically the SPX consolidating between its January low and January high. You had a 5.
Exactly.
Yeah.
So. And it's an important data point. This is easy for now. You can use the SPY for whatever reason you don't get access to the S&P 500 out here. But if you go back and you start looking, you're going to understand just how important it is, especially once we break above or below one of these two levels out there. So at this point in time, right now, it's nothing more than a consolidation in between. We're taking a look at 2024. If we come back and we take a look at 2022 as an example, 2022, here's the January high, which never got touched, okay? But once we started trading below the January low, we continued to move lower out here. I'm not trying to differentiate between like a major bear market or something, but trying to help people to be able to interpret the message of the markets.
Yes.
And turns out that this January, this is not what's referred to trading-wise as the January effect out here, but it's really important. Watch, if you look at 2021, you can see the January the low was never tested. Once we got over the high, we consolidated for a bit. But once we and back here, it was in about March of 2021. Once we just continued to test that support level, it acted as support. Boom, we just simply took off from there. So another thing for folks to take a look at. One of the other things I was going to discuss was apogee and perigee, the perigee pivot point. So apogee and perigee deal with the distance of the moon to the Earth during the current lunar cycle. So during this current lunar cycle, perigee came in on Saturday, and what I do is whenever perigee comes in to the exact minute of time for futures contracts, I will identify exactly where that is trading. And for reasons unbeknownst to me, oftentimes they'll act as support or resistance. What they will also do is they'll certainly give you a short-term direction, whether it's short-term long or short-term short, so to speak. And now, in this case here, perigee came in on Saturday afternoon. I think it was Sunday afternoon, before the market, maybe it was Sunday afternoon, before the market had opened. So in that case, what I do is I look at the close of Friday and the open of Sunday night, unless they're really close to each other. For example, in silver, they were pretty much right next to each other, right around the 31.71 area. Gold is either 28.72 or 28.67. Those are levels that people who trade gold or silver or trade in the metals, probably something that they just simply want to know. If price starts to break through those areas out there, what you can expect or anticipate is a further move lower. Just as something I had taken a look at during the break, I was curious what the spot VIX index was doing. And the spot VIX index, or if you take a look at my, it's really the second line from the top, you see VIX, spot VIX, and you'll see what's referred to as a rate of change. Daily rate of change. Right now it's at 20%. I don't know where it's going to be at 4 p.m. But if it's anywhere above plus 10% out there, what that does is that triggers a potential bounce or bottom in the overnight or early morning session out there. So you've got, when I say overnight, it could be when Asia opens up, early morning, it could be when Europe is opening up. So 8, 9, 3, 3:30s, in those time frames out there. Sometimes it might not be till even later in the morning. And what we're looking for here, I'm going to go ahead and change screens. I'm going to change to a white background screen. Okay. Because I'm anticipating that we'll have a more than a 10% rate of change at day's end. Okay. And so one of the tools or techniques that I teach folks is referred to as the Rhodes Momentum Indicator signal. Now I'm going to just simply open up the 30-minute chart here for the ESPN. I'm going to show you examples of those signals that have identified bottoms out here. So as an example, when these black diagonal lines are triggered, whether it's to the upside or to the downside, they're telling you that the market is stretched. And what we're waiting for is we're waiting for the cavalry. In the case of the cavalry, if we're looking for a bottom out here. And the way that the cavalry shows itself, it identifies itself by creating a bullish reversal candle. And that's what confirms that pattern out there. The last time, or what we're looking at on my screen right now, that was at 12 o'clock in the afternoon on December 25th. This is the type of pattern that you would be looking for in the overnight hours to be able to take a long, even if you're short, to consider trading around that and taking a long trade. Here's another Rhodes Momentum Indicator bottom pattern out here, nice bullish hammer candle. That took place at 10 o'clock in the morning on the 28th. And then we got one heck of a nice rally up until we generated a Rhodes Momentum Indicator top out here. So right now, you can see we're in bar number 7 on the 30-minute time frame chart. That means bar number 8 is being worked on. And if we tick below the low of this last bar out here, let me pull this off the side just a tad, just to give you that price point. That low is 58.31. So we haven't ticked below it just yet, but if we do tick below that on in the next bar 8, so bar 8 is going to complete at 4. By 5 o'clock, we would have potentially a TD9 count bottom, as long as we make a lower low between now and then out there. That would be one of the signals. So you'd be looking for that. But this Rhodes Momentum Indicator signal, you and I have talked about this, Jacob, where I kind of use the analogy of it's like that bouncing ball that you you're in a pool and you push down and then it eventually, just simply explodes up. And that's typically what happens with that pattern. That would be the ideal pattern, but you're still just looking for a bottom signal out there. And you can see here as we look at it, it's typically you get those best signals on a 30-minute time frame. As you know, I use multiple time frames. I use, for the equity future, I'm using 15, 30. I'm using 10, 15, 30, 60, 120. 240, 300 minutes, and then the daily time frame out here. So you're looking at the 30-minute chart. You can see up in the upper right-hand corner, you got the NQ also now. Now that has formed. That is bar number 8 right now, because that has made just a slightly lower low. So is the ES Mini. So watch for that pattern. That's a pattern right now as we come into the close that could be signaling an anticipation of some type of overnight rally. Now the rally ought to take us up to the oscillator and change line. In the case of the ES Mini, that's around 59.06 or so. It's 26.69 inside of the NQ out there. If I see these patterns form overnight, or not overnight, well, and I happen to be up maybe later on after when the markets open back up at 6 o'clock, I'll post something inside of the Tigers Den if I see it. But so that's what I see that's going on. I would anticipate at this stage here, nothing's really broken. Not saying that it can't get broken, but nothing is really broken when I take a look at how the market is trading, and we're just simply trading with inside the January range out there. So this could change tomorrow morning, right? It could, things could just simply fall apart, and it could change tomorrow morning. But I need that market to prove it to us. And so 57, 73, 31 is the number for the S&P 500 to watch.
Yeah, and that's really like one of the best utilities of that graph you showed. I mean, we've been bouncing in that resistance line for a while. I know it seems like, Babylon might be burning, but I mean, we're pulling back to just January lows. We've been here recently. So, Steve, thank you so much for coming on. We'll see you tomorrow morning, 11 a.m. All right, Steve?
Sounds great. Thanks, Jacob. Have a great afternoon.
Take care, Steve. Folks, if you stay right there, we'll be right back. We're going to go over Nebius, Intel, NVIDIA, all of the good ones. Stay right there, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everybody. This is Jacob Shoup, watching the Tom O'Brien Show. We just had a great couple segments with Steve Rhodes. Again, Steve is on at 11 a.m. Eastern time for the Trader's Edge. Strongly recommend checking that out. Steve will answer your questions. If you have a stock you're looking at or whatever it might be, in the Tiger's Den trading room, you type that in and he will look at it. It's fantastic. If you want to get that service, we've had a few people sign up recently. They've been enjoying it. Tiger's Den trading room, you go TFNN.com/collections/services, and it's going to be right there on the top row there. And it's $1 a year. Again, the only reason we do that is because we just want to make sure we know who's in the den. We want to keep everyone safe. It is a fantastic kind of tool we have here. So looking at the SPY, and again, we're coming lower, right? You're starting to develop some volume at the end of the day here. Movement to the downside, really starting around 3 o'clock. Okay, so you're off 2.29% right now in the SPY. You're right above that 579 level, trading at 580. Again, what we're looking at in the SPX, at least per Steve Rhodes, is that 57.73. That is the January low. And I mean, that's what's important to keep in mind about this, right? I know it is... It's shocking. It's like a cold plunge, right? Because we just kept moving up, and the exuberance was there, and then all of a sudden it stops, right? So, of course, you did have some stumbling with DeepSeek. You had some stumbling with the Feds in December. But listen, I mean, what we've been talking about for a very long time is just moving back to that pre-Trump rally, okay? So, with the Trump bump, as I guess we're calling it now, I don't know if I like that term, but... nothing has changed for the market. Okay, there's this anticipation that things were going to be maybe immediately better under Trump for the market, and that's not how it's turning out to be, at least right now. I personally think what's going on is he's trying to make it, and this is not a political statement at all, but I mean, it's just kind of makes sense what's going on, is he's trying to formulate the playing field the way that he wants it to be, to leverage off. So, okay, maybe that says, all right, maybe it does work and the next 3 years are fantastic, or the latter half of this year we start seeing a pickup. That's hard to really call. That, of course, is vast speculation and a lot of uncertainty in there. But what you can see is that your earnings weren't, knock out of the park exponential growth earnings. You see, we saw that with the Magnificent Seven. NVIDIA was fine. There were great earnings, but I mean, we're pricing in consistent upward movement, just like linear upward movement. And that's never how these things work, especially when you look at things on the short term, right? And so you also have declining economic conditions, right? You have the tariffs throwing in there, right? That's a big problem. So, hey, why not pull back to that pre-Trump level, and then we just move on from there? And that's what I think we're seeing right now. I believe we're going to continue to see that. I mean, Tesla has moved to it. NVIDIA is moving to it. Everything is moving to there. So you're really starting to see it in the market right now. You're at 580, 82. Depending on what he says tomorrow, I got to look and see what time that is. If that's at any, time close to my show or whatever, it might be fun to do another, den watch of the State of the Union, or maybe, I don't know, political things can get a little heated. But anyways, right now you're trading off 2.21% in the SPY. I think we settle, right at this kind of Trump gap up, and then we move on from there. That's what I'm saying, okay? Looking at Tesla right now, you had a rejection of a movement to the upside today. I mean, it was pretty strong. We were up like what? Oh my goodness. I mean, you're up like 2% half in the middle of the day. This is a volatile stock today. You're just flashing off 6.2%. Now we're off 4.82%. Yeah, this is some pretty strong movement to the downside, making a low right there of 277.30. And again, we've been calling, buy puts on this thing for around 288. Now it reached that target, much quicker than I had anticipated, I suppose, right? But I mean, if we're looking at closing that Trump gap, I mean, you're talking around, like a 552, 550 area, I personally think with Tesla, because conditions have deteriorated for them, and you're looking at a general macro environment that is antagonistic both nationally and internationally for Tesla, and I talk at least with its current line of products, okay, I can see this pulling back to that gap up in October 23rd, right? Now, you do have some of these larger analysts getting in and saying, hey, no, we're going to go right back to the highs because of the robots and all these kind of full self-driving. I don't, okay, maybe, yeah. Do I think it's right now? Absolutely not. These Optimus robots are not anywhere near ready to be used. I think that the way they're positioning these robots is kind of for consumers, which is, okay, interesting to have a robot made in your house. I'm a Jetsons fan or whatever. But, what is the adoption rate on that? I mean, this is uncharted territory, right? So, of course, that's going to be highly speculative. I really do believe that it needs to give up all these kind of gains. And it has been. I mean, it has been. I mean, we were talking about this right after earnings. You had a massive bump up. I'm like, this doesn't make any sense. These were abysmal earnings. This needs to come back down. You're going to get more numbers coming out that are most likely going to be, equally as bad. And we're going to move back to the gap up. So we'll see if it can fill, if it can close that gap from Trump, right, on some decent volume, and we consolidate around that level. I see a movement back down to that October gap up. And that's kind of where my money's parked with that, I guess. Let's see, Nebius. Man, this is like overreaction. I'm buying more at these levels. I think that their earnings were fine. Kind of to be anticipated when you're gearing up just basically a new company, right? I still think their balance sheet conditions are fantastic. I think Europe is really waking up and understanding that they, dad needs to come home and they need to start taking a stronger role in their countries, in their region, right? And so that does include building out their own AI and building out their own data centers and maybe becoming energy independent, right? I would love to see that. I mean, France can really supply most of Europe, that's not necessarily the case. They can supply themselves with nuclear energy. They can build that out a little further to have their own data centers there. I believe that the way that the EU will probably approach this is they will have a shared AI. This is what they like to do. And I think it makes sense for them. Nebius has, a big presence there. That is the data center for Europe. They are getting into the US, which I think is going to go well for them. Of course, they also have AV Ride, and you want to talk about, if you like the autonomous robot kind of perspective, they have these little ones that will follow you around. They're little, baskets with wheels on them, whatever. That's not necessarily the reason why I liked Nebius. I really did like their balance sheet and what they're trying to get into, and I liked their management group. I think it's fantastic. This, I think, is just an overreaction. Nebius, the way that I kind of see this thing move, is it is the last to get the run up, and it is the first to get some kind of sell off, and it comes back, right? So, I mean, I'm adding more. Of course, I really recommend doing your due diligence. You've got to know what's going on with this company if it's interesting to you. But this doesn't freak me out at all, at least on my end. I like Nebius. I will definitely get some more on my end at least. But you're off 14.07%. Again, on really nothing. Now you're back to this undervalued kind of level in the equity, I think, anyways, I'm holding this one. This is going to be my favorite play for 2025, at least one of them. Folks, stay right there. We'll be right back for a short segment after the break.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everybody. This is Jacob Shoup. You're watching the Tom O'Brien Show. We have a short segment left here. We're talking about Nebius a little bit. I think this is a pretty strong overreaction for Nebius. Let's take a look at Intel right now. This should be lower. Yeah, it is. Okay, off 4.5%. TSMC expected to announce they're going to do a $100 billion investment in U.S. chip manufacturing plants. I don't believe Intel gets any of that. I mean, keep in mind, TSM and Intel have beef with each other. Now, that was more Gelsinger. He said some relatively offensive things to the Taiwanese people. Okay, you don't really do that when you're doing business, especially international business. He's out, but I still think that, I mean, I definitely know that the Intel board has just mismanaged this pretty significantly, and I don't see why TSM invests in Intel. I just don't see, right? I mean, maybe they buy some stuff from Intel, maybe they buy hardware, I can't say, but I mean, Taiwan Semiconductor has been looking to developing, and I think they already are developing a plant in Arizona, right? Say they're building new chip manufacturing plants in the U.S. over the next 4 years. I'm sure they'll have a few of those. I don't see why Intel gets put into that. And that's always been, when I say always, this has been the recent kind of gambit with Intel, you know? This comes around every few months where it's like, don't worry, this is going to come back, or they just released something new, or they're going to get bought out. I mean, I don't see it. I don't see it. I think TSM builds their own stuff, and they're able to skirt tariffs that way, and Intel gets left out. And I find it kind of like, you know, almost loud in a way how much Trump has not really spoken about Intel at all and its place in making the U.S. one of the manufacturing hubs of advanced chips. I don't know. I don't like the risk for Intel. TSM, I don't know. I think this sell-off might be a little weird for it. This might not be bad news for them. Folks, thank you so much for joining me. We'll see you tomorrow morning, 9 a.m. for Tommy O'Brien in the Morning Market Kickoff. Great show. See you then.